Hi everybody, Neil Pryor here, MVP as I'm known at Trade to Win and Forex Factory, and a very good evening. It's Sunday 20th of January, and I just wanted to give people a very quick update as to what happened last week. I try and do weekly updates when I can, when I get the time. So here we are again. Just wanted to introduce myself. My name is Neil Pryor. I've been trading. Actual trading, physically trading, for about 40 years now, back since the 1980s. Started trading Forex in the early 2000s. Been doing that for about 19 years now, 20 years. And try and share as much of my experiences as possible online at Trade to Win, Forex Factory, and also here at my FXCORRELATOR.com website. You can see that on the right hand side there. And I have a blog there, and I invite people to join and subscribe. It's all free. I will be running hopefully some courses this year which I will charge for, but there's a lot of free stuff I've given probably over the last 10 years online. And I've helped hundreds, if not thousands, of traders to find their way, and certainly give them an insight into how to use Forex strength meters, and certainly how not to use them, of which there's plenty out there at the moment. I did post something last week at Trade to Win, I think, in Forex Factory, where I was talking to a trader that shared with me a course. Let me have a look at a course that they'd paid for, physically paid for, and it wasn't cheap. And it comprised mainly of a very basic Forex strength meter information, or basic in terms of the way I would look at it. Real simple stuff, all of which, or 90% probably or more of which, I've provided for free over the last 10 years. So I'm helping that person bring them up to speed, and I'm actually going to give them some stuff which is much more valuable than what they've been sold. So again, I try and help people. I mean, if everyone's ever got any questions on Forex strength meters, or even just trading, just talking about trading Forex, please contact me. I won't buy, and I'm happy to give advice, or point you in the right direction, or even help you or mentor you. I'm doing some mentoring, not much because I haven't got the time, but always happy to help, guys. Always happy to help. Okay, we'll talk about this in a minute. I'm just flicking this up, as you can see. This is my blog, and kind of things I was talking about last week, and you can see, just click through, take a look. Most of them fairly interesting. I'd like to think interesting. Talk about convergence and divergence there using Forex strength meters, and talking a little bit about Brexit, which we're going to talk about now, and the Brexit vote on Tuesday, what happened to sterling. And also, every day I do run a Forex diary, and we might just flick into one of these and compare it to what actually happened over here during the week. So you can get a bit of an idea of what I was doing. Sorry I can't share the exact details with especially how I scalp, because number one, it's it's taken me a lot of years to get that right. And number two, as and when I do train it, it does take quite a lot of focus, guys. It's not easy. It's not some silly button flashing and you press buy and sell. This is the proper world. This is the real world when I do share it. The real world of trading. A little bit of discretionary trading in there alongside, what I call a fairly robust system. But again, it's not for the faint-hearted, and no one. I mean, I could give you a successful trading system tomorrow, and I guarantee you, if you haven't got the experience, you haven't got the discipline, you haven't got the ability to execute efficiently, you will lose money at it. So you will come to the end of the day or the week, and we will compare notes, and I will have made money, and you won't. And that's the way it is. That is the way trading is, guys. You don't do it overnight. You don't just. It's like playing tennis. It's like playing golf. It's like becoming a brain surgeon. You don't just read a book and then the next day turn up and become the best of the best. It doesn't work like that. It takes years. Probably shortcut it inside about 4 to 6 months if you really know what you're doing and you've got ample focus and very good mentoring. But even then, 6 months. I don't know how many trades that might involve. What does 6 months give you? I mean, that might give you possibly quite a few hundred trades if you're trading 20, 30 times a day scalping. But that's still not enough experience. You've got to be into the thousands and thousands, and I can't even begin to imagine how many trades I've taken over the last 10 years on Forex. So it's all about practice. Anyway, enough of this. Let's get on and take a look at what happened last week, okay? So what you're looking at here, is not a standard moving average. In fact, let's pull that up right now. This is a standard moving average, the FX correlator 21. Okay, so that's a 20 moving average chart. Here you can see there, and it's default, it's free, it's available. If you go to Trade to Win, if you go to Forex Factory, and obviously if you come to my website, you'll find it for free on one of the pages. Okay, and this gives you an idea of what was moving during the week. And you know, the 1 hour, which is what this is on, it gives you a kind of good idea of a guidance as to where to be. And let's just quickly talk through this week. You can see here that sterling actually was quite strong leading up to the vote. Then it crashed. We'll talk about that. And then it rallied. And notice how really for the rest of the week sterling stayed above the zero line. Remember, if it's above the zero line, really indication is there for you to keep trading it until it drops. So as long as it's diverging away from this line, there is potential here to make a lot of money. Big day on Thursday this week, 17th, and then there was very much a depreciation of the currency right at the end of the week, and it sold off. And we're going to talk about that. So this is based on the moving averages, the free information here. Now what I'm going to transfer or transition from that, I'm actually going to transition to the fixed chart. Okay. So this is based on the strength of each individual currency up here, all 8 currencies, based on a fixed start starting Monday, 14th of Jan. So you see this? Over here, this is pretty much early Asian session on Monday morning. You just can't see it at the bottom there. It is. And it just really runs all the way through the next 5 days. Yeah, the trading week. And this is where the currencies went in relative terms against one another. There's no delays, there's no skews. This is real actual price timing as it goes through. And again, we're going to talk about what happened this week. Okay. I've just put my blog, 14th of Jan, alongside, just a quick extract for what happened on the first day of the week. And just giving you an idea of what I was doing. GBP under pressure today, sell. So as you can see here, you see the red? See the red came out here to the bottom? This is where I was talking about. This is the kind of action I was talking about, all the way down to the bottom here. I was selling sterling early on, which turned out to be a fairly good idea. Then, as I recall, I think sterling flipped into a bull mode. And then I also gave an update on there using the standard 20 moving average. I think it was on a 5-minute, just showing the way sterling, you see here how sterling initially was weak, as you can see on the left there, and then it showed a lot of bull action through the rest of the session. So again, just flicking across to the left here, if you can see things here, it was weak and then it was strong. So again, I'm trying to give people updates as much as I can. But it is, it's just one of those things. I can't be live. I don't run a live trading room. So just trying to give you an indication that, I am trying to do this. If you subscribe or just subscribe to the blog and my website here, I try and give these kind of insights to people that are trading the lower time frames. Okay. And each of the days, you will see this going on. So, I mean, overall, to be honest with you, if you look at the kind of spread that these guys got out to in terms of each indexes, I mean, sterling only got out about minus 30 pips for the day, and it was really under 50 still, even for the yellow yen. So this was actually quite a tight day, and that's generally what happens on a Monday. You don't get much volatility and divergence on the currencies. Came into Tuesday, which was obviously aiming to be a very, very big day. I was telling everybody last week on this video and all this week about trade what you see. Don't listen to guesses and predictions, just trade what you see. And sure enough, this is what I did that day. This day, basically, I traded initially and did quite well, and then I followed cable down. Let's see if I can pull this up. So here we are. I've just pulled up my Forex diary for the 15th of Jan. You can see here the times that I post these things, and I was talking about fireworks day, obviously, and we will start to see what's happening. So, I mean, in terms of what we saw, just trying to check through here and see what I was actually calling. So you have to bear in mind that I'm very much trading an individual session. Remember, this is the whole week, so I'm not following the week from the start of the week. This is all about trading each session. And I was actually selling cable, and I was selling EJ. So basically I was selling the Europeans. And if you can see here, you see the blue line coming down here and you see red falling. That's what I'm talking about. That is what I was actually doing. That won't be as apparent on here because it's a larger chart, and that might take you, if you're taking bigger positions, you might be actually thinking trading currencies in certain things. But in terms of the immediate session, that was very much a signal to me that Europe was falling. So I did that quite early on. I did quite well, resold cable through. So 10:30 coming up, then we came into the afternoon, got into the late evening, and then I actually then had a session as we came into the vote, and I did actually have a conference call with quite a few traders, and we then almost did some live trading through then until probably 9-10 that evening, on and off. So I didn't have time to be posting on the free sites. I'm really sorry about that, guys, but I do get dragged in other directions sometimes. But basically, whatever went on here was pretty obvious. Sterling crashed down, and then it actually came back again later on in the evening. And then the next day, on the 18th, I did actually make a comment quite early on about what was going on with Brexit. And what I did was actually using a 20, using this that you can see here. I actually just show people just how far Brexit fell and then stormed north. Can you see this storming up here? And we'll flick back now to the main chart. I mean, for Brexit to have been supposedly to been a negative event, it came down to about the minus 100 pips. So sterling was minus 100 pip for the week, and it actually come off of a 45. So it came off about 145 pips there. If you can see from this area where sterling had reached a high for the week, notice how actually that was very similar, how it had already peaked. So that was hitting a resistance point, sold through on the vote. That's about 140 pip swing just on sterling. I mean, then you have to add the other currency to it, but there was a massive swing there. And then look at this climb all the way up here, and I'm gonna bring that up, guys, and you can see where we were. About 175 pips, 200, nearly 300 pip swing. This was a 300 pip gain by sterling through the rest of the week. It did come off on Friday, I admit that, but stunning performance. Now, this was obviously off the back of quite a few things. As everyone's aware, there were quite a few news releases. Bank of England spoke, Carney spoke, a few other things. And really what they were doing was they were actually implying that this could be the worst that sterling gets because of other possible events. The delaying of the decision, or possibly even no decision in terms of Remain. A lot of rumours that were bouncing around, which really gave sterling quite a push. And it ended up very much by the end of Thursday night, by far the strongest currency of the week. Did come off, but it still held. Look at it, just held above CAD. So it was actually overall a gain in the week for sterling, which I don't think many people would have bet on. You would have got, if I was a bookmaker still, you would have got a very good bet from me. I would have given you 3-4 to 1 that sterling was going to end up top. I might even give you more than that, actually, that sterling was going to stay top. But I don't. I'm a trader these days. I'm not a bookmaker like I was in my teens. There it is. So, I mean, in terms of what happened this week, I did pretty well. I mean, I did follow this sterling all the way up. So this was the 17th over here, yeah, where there was a massive bull run. And I just wanted to, again, just flag up where I was and what I was doing. Interestingly, although it doesn't look like this, actually sterling was quite a sell early on. You see there's a couple of big moves south here, and I was quite happy to be selling it. And I actually did quite well scalp selling it for a while against cable. But if you look here, and I'm just going to label it, that's... actually it was earlier than that, but by about 11:30 I did flag on here that cable was bull and sterling had gone bull, and that is roughly where this line is here. See here? So by this point I'd looked at the market. London opened about here, that's why I was selling, came up. I decided to start buying earlier than this, in fact, probably more around about 11ish, but hey. And yeah, I'd already scalped twice so far and made some nice things. But later on I commented by 2 o'clock, GBP still bullish, as you can see there. I've been working it from the 2880s to the 2920s. I was already 40 pips of action there I was working in between. I was also talking about buying GBP into CAD. Yeah, and then I was still even buying cable then when I commented later on in the day, way up here. So just giving you an idea of where I try and give directions and why I'm doing it. Not necessarily on this actual chart. I have other charts obviously for lower time frames and things, but that was what I was trying to do and give people a steer. I just want to highlight Friday the 18th, and again another blog I posted. And what was I saying? I was talking about selling weakness and buying strength. Now again, the chart you're seeing on this side is not this chart. This is fixed start. Remember, this is pure movement. This was on a moving average. This is the 20 MA of the M15. Again, if you go to my blog and website and blog, you'll see what I mean. And again, what I was trying to tell people here was that sterling was weak pretty much all day, all through my session. All I was doing was selling. And it says down here, I've been selling GBP in the forms of cable all day. In that time, I've scalped cable down from 2970 to 2892. That's 80 pips of trading area. That is 80 pips. This movement down here, and I'll show it to you in a second, represents in terms of cable. And see the sterling, see US dollar was rising, and sterling was falling. So this is a great sell trade on cable. There was about 80 pips during that period, okay, and I think it wasn't even all of this. I think it was earlier I was commenting on this post, and all I was doing was selling it. I had 80 pips. There was an 80 pip range that I could sell it through, and I kept going in and out, and I think I had about 12 scouts, and I think I might have got one wrong there. I might have scratched one, but I had something like 10 or 11 winning scalps. And as it says here, why? Because sterling was the alpha bear currency, the weakest all the time. You see, again, using the FX correlator, the basic one, to get into selling. Okay, so I know this is a little bit choppy and changey this week, but all I wanted to do was again communicate what happened in the week and just flag you to my blog, my website and blog, and what was going on, and just to give you a heads up of what I was trying to help people to do. So just to summarize, I use Forex strength meters like this, and my moving average version in all of my trading. It steers me, it gets me, it basically, so as I say, there you have it in terms of what's happened. But let me just leave you with one thing before I go, because it's been about 17-18 minutes now. Let me just leave you with one thought about using Forex strength meters to trade the market. There are 28 pair combinations in the Forex G8. Yeah, the big majors. You can see there a few examples, you know, sterling against US dollar, euro against US dollar, sterling against CAD. If you go through all the combinations, there are 28 possible pair combinations you can trade at any one time. So answer me this: if you are very possibly only following and trading 1 to 2 currencies, you're trading ones, there's a question: what are your odds of being on the best currency to trade all the time? All the time, not once a day, not twice a day, not once an hour. What are your odds of being on the best currency to trade if you're just following those 1 to 2 currencies? And I'll tell you what the answer is: very, very, very low. Why? Because you're not following, you're probably not following the pairs that are in motion at that time, that have the most volatility. And that is what I do. I chase the currencies that are in the best position to trade, giving me the best opportunities, the best advantages to make a profit. Okay, that's all I do, and that's what I can teach people to do. And just to conclude that, this is what the FX correlator, what I do, what it's all about. It allows you to see the market, all 8 currencies, or as few as you want. You don't have to see all 8 at the same time. So it allows you to see the market 24/7. It allows you to read the market, understand it. I can help people understand the market. And then through that process, it allows you to hopefully beat the market, to beat the market at its own game. Why? Because you're looking at all 28 combinations. You're trying to pick the strongest, the weakest, and the best combinations, the best patterns. So this is MVP signing off. I hope this has been quite interesting for you this week. It was certainly a good week for me. I did very well, no complaints at all. And let's see what next week brings. So all the best, guys. This is MVP signing off. Cheers. Bye.